Hi guys. So I made with Ben. He also has a YouTube channel, a new Trololo chart. Ben also, well, we work together on it. He has also a YouTube channel where he does a lot of work around this. Um, but yeah, I thought it was important for me to make my own because, of course, yeah, this kind of work is also not only do you have the chart results, but then also the interpretation to it is very important in order to make decisions, investment decisions. But very interesting to see is that with the recent drop, we reached a new undervaluation in this cycle, in this bear and bull cycle, which I've called it a bear cycle and a bull cycle. We did reach again a new high in undervaluation. If you remember, before it dropped from 6,000 US dollars to 3,000 US dollars, then we went to about an undervaluation of 50% here. Of course, it's a little bit done different here. But here it's like 100% is the red line, so is no overvaluation and no undervaluation. That's this line here. That's when you go to the overvaluation or you go into undervaluation. And then you have, for example, here it hit at 60%. That means it's minus 40% undervaluation. We hit with this new trend line fit, because before the other trend line fit done by Iowa and Wonder actually showed here 50% undervaluation. But that's not the case with this new trend line fit. If you draw this a little bit higher, a little bit lower, you get other results. But that doesn't really matter whether it's like minus 40% or minus 50% here. What matters is the trend and the patterns, and are they intact or are they being broken? And the pattern I predicted, looking at previous cycles, is that we always go more below the trend line, and so we always make higher undervaluations over time. As we and the other way around, we always go less above the trend line in every cycle, and every cycle we make less overvaluations. Uh, and this finally now with this recent drop proves true, that indeed that's the pattern. And of course also that cycles take longer and longer over time, and that growth goes down over time, also very important. All these patterns convinced me that the crypto markets was way too bullish, and was in for a big correction, because we can't keep going like this. This was way these valuations were too high. We needed to make new highs in undervaluation, and now we finally did this. With current valuation of 150 billion, we are at 60% undervaluation. We are at 40%. These levels, this was only once reached in the previous cycle, the 2015, 2013 bull, 2014 bear, and then the 2015-16 bull. Undervaluation goes up over time in this period, and here it went the highest after a sideways movement. So, but typically, what you see is that in this cycle, undervaluation will likely peak out not at where we are right now, but at a little bit higher. But that's likely not going to be lower fiat prices. It will likely be at higher fiat prices, just like it happened here. The highest undervaluation was here at the end of 2015, when Bitcoin went from a low of 155 US dollars to $300, $350, and then before the bull market really took off, it tested the bottom and went down from about $300 to about $200. but it didn't go to $150. It went to $200, and that's when a new high in own undervaluation was set here, and that was the highest undervaluation, because after that prices started moving up, but not faster as the trend line. So you kept in an area of undervaluation all this whole period. Was a good time to invest still, but it would have been at higher fiat prices. And I think that we might see something similar where we go sideways for a while and we hit, for example, the green line here. That was never hit in the past. You can see you have upper band and a lower band, and you can see that the lower band here is not touched at all. Here come closer, but it always comes closer. So maybe we will go on that green line up. Before first we go sideways towards it, and then we start to move up slowly, and then after that we take away from it into a new bull market. Well, yeah. So that's a probable scenario, but I think that at current valuations, actually, this is a screaming buy, and that's of course very important. Why? Um, Well, there are many other indicators why this is screaming buy. Not only the Trololo chart shows this, that there is clearly 60% undervaluation to fair value, that currently paying only 150 billion for crypto is cheap because we are at 380 billion. That's the fair value. So it's like 60% undervalued. That's very important. And the highest undervaluation yet since 4 or 5 years. We only saw this actually once before, and then we saw it in the beginning of time also, in 2010 also. So this is the third time we have such big undervaluation. This is an extreme, unique situation. But I think it's even much better than that. If you look at within the crypto market cap, actually Bitcoin Core is still 60% of the market or 65% of the market. But what we saw with this correction also is that actually Bitcoin Core corrected as much as Ethereum or Bitcoin Cash and many others actually was about the same amount of correction, and that's unique. That didn't happen in the past. Bitcoin Core would always be the least correct, the least by far, and smaller coins would correct a lot more, and that didn't happen. This shows to me that that we're in for that the market, the crypto market, is in for a very big surprise coming the next few years, where the smaller cryptos will gain a lot of market share, and Bitcoin Core is losing its role in the cryptocurrency world. But as of today, that's not the case yet, because Bitcoin Core still is 60%, and that means that these other coins are extremely cheap, such as Ethereum went to $100, is not now 110 or $120. The previous low, if you remember, was $80. We're a little bit higher, but I don't think it's likely these are going to make new lows. And also Bitcoin Cash, for example, has done very well during this correction. Let's look at the total correction. But they are holding very, very well relatively to the other ones, and will likely go up a lot. Under $60. The previous low for Bitcoin Cash was also $80, but that was an extreme scenario. I think both of these will set a higher low. Look at 7 days, 40% correction. So 37%, 46, 32, 40. But you can see there's not much difference here. Like it's amazing how Bitcoin Core made about the same amount of correction as others. Tezos made a bigger correction, but also went a lot more in the past half year. So that's very interesting. Let's look at other indicators. This one is very important, the MVRV ratio. Um, um, is the market value over the realized value. Also, something that very rarely goes negative, but it goes negative after a very strong correction, after every bull market. It ended up in negative territory, and that's really the cheapest, the best time to buy. And when it goes below one, it went below one here also in 20. When it dropped from 6,000 to 3,000, there was around 4,000 for a couple months. Also went below one. This is Bitcoin Core. And now again, it was below one. This is very rare to see that below one. And we're right there. So, I mean, I've always said Bitcoin Core is not a good investment. It's too expensive, but I can't say that today anymore. At the current price of 5,000, Bitcoin Core is cheap. This is also an interesting. It's also the MVRV of Bitcoin, but also of Bitcoin Cash. Let's do Bitcoin first. Since inception, here you can see it went below one. What does that mean? It means that people on average are sitting on losses. The moment it's above one, they sit on profits because it uses realized value, compares that to market value, and realized value is how much people paid for their coins. So on average, people are sitting at a loss right now in Bitcoin Core, which is a rare event. And if you look at Bitcoin Cash, sitting again on below one on a major loss at the current $160. We have an MVRV of 0.6 or so. That means on average 40% losses for Bitcoin Cash investors as of today. The fear and greed index is also clearly showing a massive fear we're at 12 here. If you look at the historical readings, this is does not go very far, but the last time we were at about 10 of fear and greed index was every time there's a very strong correction. It's not updating. I want to see the historical, but I can't. It's not working here. So yeah, also volume readings are very interesting and important to look at. Bitstamp, for example, the volume is higher in this recent drop than in the drop from 6,000 to 3,000. What if you remember? What was really missing there was volume. The volume was relatively low on that drop, and actually at the bottom of 3,150 it was almost no volume, and therefore it was questionable whether that was really the bottom, because you should see a spike of volume that goes so high, like for example the previous cycle 2015. The cycle spike, the bottom was reached with extremely high volume, as high as the bull market. Well, that happened again now. The volume goes to about here, and the volume is as high as during the bull market on this drop from 7,000 to 3,800 was the low. I was good by two, but the volume was there also. That's very important. On Kraken and Euro, same story. The volume went to here, a lot higher than the previous one. So all these things, and if you look at my investment plan, we clearly reached this step, and I bought here at 5,500, 125 Ethereum, 160 Bitcoin Cash, an undervaluation of 40%. That's where we are today, also about a little bit lower. But the question here is, did we test the bottom? And at first I said on Twitter that I don't think we tested the bottom yet. That's the next stage. I have two more steps, testing bottom and setting a new bottom, and probabilities linked to it. I had a probability of 66% to test the bottom, but I think we did it already. We did go to 3,800 shortly, and we went to 90. I think it was for Ethereum. It was only a couple minutes, and 150 or 145 for Bitcoin Cash. It was only a couple minutes, and then it shot up very strongly to 5,500 again. Also, the next few minutes on March 13, but it was reached. If you had your buy orders there on Bitstamp or Kraken, they would have been filled at 3,800. And but not so, for example, with Bitcoin Cash. Uh, 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 Ethereum actually was 90 the low. If you said at 100, it was filled, but actually at 150, it didn't go that low for Kraken Bitstamp, but it did go as low on other exchanges. So this actually was reached, and of course I was not able to buy at these levels, sadly, but that's typical, that very few people succeed in buying at the bottom, of course, because yeah, you still need to have fiat on the exchange ready, in a ready order, to catch that. It needs to be there standing open at that exact price, and it will be filled, and you can't come later to try to buy there because it's already gone minutes later and it's a lot higher already. But counting what the market cap was around 110, 115 billion there. That was 10, 15% higher. Also here, this is 10, 15% higher than the low of 3,150. And so we did test the bottom, and much more so than the previous testing of the bottom in 2015. We also tested the bottom here then when a new high in undervaluation was set, the all-time high or the all-time low in undervaluation, you can say. We reached $200, but that was 30% higher than the $150 that was reached here. So now we're not 30% higher. We actually went only 15% higher. And so it's unlikely that we will double test the bottom. Now people hope for that, but that's usually not how it goes. It's a one event, and it won't happen again. So I think that we did test the bottom. I was unable to buy there, but for it to test it again, I think it's not the same probability. It's not 66%, it's only 44. That's important because that also influences the recommended allocation today. If you have a 66% chance to go there, the recommended allocation is today to be 53% invested in crypto. But if you only have a 44%, let me just put that in white here. So 66, if you have a 44% chance, the recommended allocation currently is 85%, 58% to crypto. So that's also what I've been executing. But yeah, actually I bought a little bit higher around these prices. So currently, even though I went to maybe 55, I'm back at 45. So now I'm starting to pile up losses myself, and it's of course not fun. And then you have to invest more and more and more. It's a difficult process, but it will likely pay off big. And of course, I didn't mention anything in this video about why markets will go down. This time it's because of a pandemic, but that's of no importance why markets go down or up. There's always a very good story backing such moves, but the big risk is of course to let yourself go into that and become bearish when it just went down a lot because of why the market goes down, or become very bullish when it goes up a lot because of the story connected to it. That's really not a smart approach. You have to stick to your investment plan. Of course you have to always look at the reasons. Things can change, but for example, with the Wuhan flu, um, uh, is not a long term economic problem that changes the world economy. No, it's a short term crisis that indeed is a medical crisis that has economical effects. People go into self quarantine, or and so have a lot less economic activity. Yes, that explains why things drop so hard. But if you look at countries that faced it first, like China and South Korea, Singapore. The moment people start self-quarantining, the amount of infected people goes down a lot, stops growing exponentially, and that's how the problem gets solved. And the West will succeed in that also. But that's of course hard to see when there's panic everywhere. But those are actually the right times to buy, because the market, the stock market, is always looking forward. And sometimes it's lacking, but in this case, I think stock markets and crypto markets, yeah, as in the past, very likely, because this correction in the stock market is the same as the 1987 stock market correction, the same strength. And it's very unlikely that market values will stay there. Much more likely is that it will recover very quickly, even though the effects of the crisis may take some time for this coronavirus crisis, for people to get out again and pick up economic activity as before. That may take a while, but stock markets will likely bump out of the out of this very fast as they went into it. So you can't wait to buy until the coronavirus is cleared. You will likely be way too late then. Market valuation will already be up a lot, probably. So that's the story. Anything else? Yeah, what's very important is to look at the long-term trend, because that really decides how strong this correction will be. And I think it's very clear that we're in a long-term stock market, a bull market for stocks, and bear market for commodities and gold. Here you can see 1940, so that's just 1930 was the Big Depression. So we had the stock bull market starting in the middle of the 30s, 40s, 50s, and then at the 60s it peaked out. These are average returns of past 10 years of stocks. We had the bear market starting then 60s for a good 10, 15 years. Then we had, and at the same time, there started in the middle of the 60s and 60s a bull market for commodities. These are inverse, and gold is this, but commodities are connected to that. They are clearly inversely correlated. When stocks are in a bull, gold is in a bear. When stocks are in a bear, gold is in a bull. When stocks go into a bull again, gold goes to a bear. When stocks go in a bear again, gold goes in a bull. And then this was in 2010, the peak of the gold bull market. Gold started to go in a bear, and stocks started to go in a bull around 2009. But where are we? We're only here. Average returns of stocks are only 8% or so, 9%. And while before inflation, after inflation, it's only 5%, because it's like 5 to 6% inflation per year. But stocks will likely peak out somewhere over here in 10 years, 20 years, at an average return after inflation of 10%. We're certainly not there yet. This uptrend has a lot longer to go, as you can see the previous cycles. And similarly, gold average returns are about 0% past 10 years, but it will likely bottom at a 10% loss of the past 10 years in 10 years from here or so, and stay there for another 10 years. Why is how does the what drives these cycles is simply the price of commodities and the supply demand around that. Typically, the way an economy works is that the cheaper the commodities are, the cheaper coffee is, sugar, metals, iron, gold, silver, oil, energy. The cheaper these are, the better for the economy. The more prosperous people are, the more they can afford, and the more they buy. And so what happens is that production of these items expands, But as the economy grows, it expands slower, and the prices start to move up of these commodities due to a shortage. And that reaches a climax where commodity prices, and that shows here in the gold price, goes up a lot. That we just saw in from 2000 to 2010, gold and all the commodities went up a lot in price, and that really harms the economy because while people can't afford, they really start to experience inflation in the shops and in their shopping basket, and people start to spend less because they can't afford it, and so they start to like, and that really, yeah, kills the economy, and so you get a crisis, a collapse, huh? But at the same time, because there has been such high prices in commodities, production goes up a lot of gold, silver, and all the other oil production, and agricultural farm products. When prices go up, production expands a lot, and then suddenly there's a point where the economy starts to collapse due to high prices, so the demand goes down, but the supply is still going up a lot due to high prices, and then that causes the fall of commodity prices. But this takes a very long time because the production, the new production that's brought online will work for 20, 30 years, producing more and more and more. And for example, oil refineries, or new agricultural lands, or like these continue to produce tons and tons of supply, and at first actually the demand goes down, but then the prices go down, and as prices go down of commodities, it picks up again, the demand, and the economy starts again. So these cycles are like 20, 30 year cycles, and we are clearly now in a cycle where commodity prices go down a lot, which is very good for the economy.
Partially filled.
Oops.
Order filled.
And we're in a long-term bull market, and that's very important for stocks because, for example, yeah, I didn't expect. Well, I did warn people to get out for the coronavirus. I did think that would really crash the market as it happened. But right before the coronavirus was there, I was saying we're in a long-term bull market, and we just breached the all-time high. So it's likely going to go up another big leg from here, like this. Huh? Like it happens here at 20, 50, 16, you have sideways movement, and when you break the all-time high, you go up another big leg for 2, 3 years. We just had this sideways movement, and I was very bullish here, and indeed it broke the all-time high, and likely it will go up another few years. But now we have a temporary correction due to a crisis, huh? But the long term, that does not change the long term trend whatsoever. Commodities don't go up in price due to the coronavirus crisis, not at all. That cycle is completely intact, and just go down even more, commodity prices, due to a lack of demand, temporarily. But that means that, and there is no credit crisis or anything. There's no long term bear market in stocks here. The consumer is not over invested, or overly leveraged, or too much in debts. No. So we are in a very healthy economy. So it's very likely that that this will bounce very strongly, similar to what we saw in, for example, 1987. This was also a strong correction in a bull market, because the bull market in stocks started around 1980. Also had a 10-year bear market here in 1970s. But then when it starts to go up, people after a couple of years, just like today, are thinking like, oh my God, it went up for 7 years in a row here, or 8 years in a row. It's time for a serious recession. And indeed, you get, I don't know what was the story at the time, but you get a strong correction. It just breaks the all-time high here, but you do get a strong correction of about 30%, and then it just, yeah, goes back out of there, and the all-time high is breached like a couple